Welcome to Cryptonomy, the big drop no one talks about, that crashes soon. First, my name is Mo. I'm a computer and data scientist. I've been a crypto investor for the past 6 years. I was able to turn a small humble portfolio into 6 figures. So if you would like to learn some of the things that worked out for me and some of the mistakes I've done, then try and watch this video. And if you enjoy it, please like and subscribe. So today what we're going to talk about is the current phase we're actually in. Many people think this is the bottom of the first leg down, but the more I analyze this, I see that we're actually only midway there. If I go back to the previous cycle, you'll start to understand what I mean. So the first leg down can be characterized as that one right there, from here to here. After the first leg down usually comes in the consolidation phase, right? And what people don't know is actually how important this first leg down is as a price level. The bottom we reach at that level actually forms the resistance line, right? The support line for the consolidation phase. And also breaking that level corresponds to the second leg down, which then comes after the accumulation phase and the next bull market, right? So if you see there, the first leg down of the bear market cycle doesn't only act as support, but as the breakout point of the next bull market. So breaking that level corresponds to the start of the parabolic phase of the bull market, right? So this is why I think talking about this level is very important. It forms many bases that the next phases of the cycle use, and we can identify which phase we're in by just understanding that level. And it doesn't only happen to the right 2022 cycle. If we do go back to the 2018 cycle, we see something playing out very, very similar, right? That's the first leg down. And that's the phase we're in right now, right? And why I think this is where we earn is because every bear market in the month of December, right, sometimes even end of January, till we actually form some kind of strength and we do a short-term relief rally, and it usually lasts till end of December, start of January. So here we can see that, and also right here in the 2022 bear market, we started it, we found the bottom of that phase in 3rd of December, right? And we just broke down around 4th of January. So it does make sense that we're kind of halfway there. And if we go see the third one here as well, yep, around 6th December, and we broke that level. That was very short, right? 9 days. But we did see them some December strength, right? So if we characterize that as the first leg down, and the consolidation phase came right after it, right? Breaking that consolidation phase corresponded to the second leg down and actually the accumulation zone of the bear market cycle. And just to support the argument again, right, breaking that level here corresponded to parabolic bull run of the next cycle. Now we did indeed break that level early on, but reality check came back and we had to revisit that through a black swan event. Right? It took a black swan event to bring us back to reality. There's one more cycle we can actually analyze to see the same picture be painted, which is very interesting, right? We can break the whole bear market cycle of Bitcoin into 3 phases, actually 4. The first leg down, the consolidation phase, then we get the second leg down, and then we get the accumulation phase. And breaking that accumulation phase forms the parabolic bull run of the next cycle. If we define it like that, we can actually study each phase separately and understand the dates they can go through and the price ranges, and then, like a jigsaw, try and understand where we are and where we could be heading, right? So that's what's so interesting about about this analysis, right? We can see we found the first leg down. I include in the analysis this point right here, right? And that point right there. So after that first leg down, you get consolidation phase, accumulation, breakup, right? But also what's so interesting about the first leg down, about the phase we're in right now, it forms the resistance line of the consolidation phase. So the bottom of the first leg forms the support line, but the halfway through the phase we're in forms the resistance line, which is crucial in playing or trading the consolidation phase. Of course, nothing that is said in this video is financial advice. Please do your own research. This is only for educational purposes only, and never make an investment based on one factor or two. I think just looking at multiple sources is the best way to make the most beneficial outcome as a speculator in the market, right? So yeah, we saw it again. The strength in December, we formed a support there. That support becomes resistance for the consolidation phase that is to come. It happened in the 2018 cycle, and right now it's happening here, but also happened in the 2022 cycle, right? The bottom, not the wicks. Usually the wicks are not, but the the bottom, the good support, not the bottom, right? The support level. This is the third wick we saw that we actually was within the consolidation phase. So that's the difference that we need to also understand. Sometimes we can wick up that consolidation phase, but that forms the resistance line, which is very interesting, right? So we can already determine, right, before we break, that maybe the consolidation phase resistance line might be somewhere around there, right? Not the wicks, but somewhere around there, which is quite interesting. It fits also the analysis of the consolidation phase that we will do later, right? It's almost close to that range, and there are several things that point that the second leg down might be heading this way, right? This is where the bottom could be reached. There are several factors that we're going to talk about. We've just kind of skimmed through that one right here. So this video will be on a little bit of the longer form, because I think understanding this is very powerful in the bear market cycle. And this is why I did a deep dive analysis into each phase and tried to put them together and see if the dates actually match, or there are some intersections in between them, right? So I hope this video helps you as much as it helps me, and let me know if you like it, right? What's also interesting, so we can actually agree, before we continue, we can agree that maybe we are in this phase, right? Nobody really knows, but probabilistically speaking, I'm more lenient that we are right here, because it's the same month. It looks like it's playing the same way. That's the assumption I'm going to work through. So what we have to do is actually get how long this phase can be, and the percentage, how high can we go from the bottom. So if we get that number from every bear market cycle, right? Yep, that's the bottom range, that's the top range, and that's when we broke the bottom range. And also get that one. But note that in here, since that wick was really long, I felt that maybe I would get that consolidation phase line, but I included in the analysis both those points. So if we go here, the consolidation phase, oh no, the current phase right here. We get all the percents, and then we can finally plot our little box, right? So all measurements are done through at that point, the bottom, right? Or where the bottom is perceived in a way. And for the top part, I kind of took the value of the previous cycle, so that's my bias, because these were pretty high, right, in a way. Another way could be is to get the average, which can also be informative. But given the time that we have left, I am kind of like gonna, for example, my strategy is to short the market, so that's the point at which I will start shorting, for example. But if you have some other goal, maybe selling at the peak, then I would maybe get the average, and that would maybe help you a little bit better, right? So if we plot them, we get, I used also 32 days, and I kind of, there's a reason to it why I think it's better than using the average or something, is because of a simple argument that I'm going to give you right now. I forgot to mention it before, that's why maybe you're not as biased as I am, right? So if you look at this graph right here, and I want you to focus your attention on two key zones, this one right here, and that one right there. All right? Everything will start to make sense slowly. I think it's a lot to take in, right? But it's a pretty informative point of view to have. If we assume, right, whether we agree or not, if we assume that this peak right here is this one right here, and this one is right here, okay? And this phase is that phase, and this is probably, of course, everything is gonna not, history does not rhyme, it just repeats. So that phase would be that, and that would be that, right? Because that's the leg at which we went up again, leg which we went up again. And what's interesting about that level that comes around cycle over cycle is that it forms the range at which the low would happen for the consolidation phase, okay? So that, the leg before the final peak forms the bottom range. And here, if you actually zoom in on the 4-hour, you would actually see something similar, right? So there was a peak, there was like a consolidation phase, but it was more quickly happening, I guess. More weird, yeah. Oh no, need to go further. We cannot see further. Maybe the 12-hour will be fine. Well, I don't know if you want to watch this or not. If you don't, you can skip through it. Yes, right there. So the bottom of that kind of come down before the final leg for the peak forms the bottom of the consolidation phase as well. So it happened again and again. That's why I felt like it's important to show you, because it's very visible when you go on the 12 hours. Just everything happens so much faster. Usually I look at the 3-day, which I feel like is more informative when you look at it long term, right? And I use the volume candles as well. So it interplays both data points. All right, so that form's there, right? Everything is starting to be painted, right? In a way that they starting to intersect. So if you look at the, for example, the first leg down analysis as well, which we did before. Yeah, no, that's the first leg, yeah. So if you check the data of that first leg down, right, as we outlined already, sorry, then you get statistics that says, measuring it from the peak, the lowest range, which is minus 52%, is right here. The maximum range is minus 70% from the peak, is right here. And this is the days from the peak, so 77 days would be right here, and 102 days would be right here. Okay? So if you also put that in there, you also get an intersection right there. Well, the top range of that first leg bottom with the first leg down, I guess support. And then you also analyze the consolidation phase, right? If you take the data of all of those, then you do get a box right here, and the point at which the consolidation starts from the top, sorry. So that would be around, I think the smallest one is 89 days from the top, right? And the maximum is 284, right? Right there. And those are the percents from the bottom, as which I have randomly chosen, not randomly, biasly chosen from this zone, right? Because I do have a bias that this might be the bottom from previous data points, right? And considering this box right here, because we measure it from the first leg down, so the first leg down must be around there, and this kind of makes sense with the other ones, so it must be around there. That's why I've chosen that level, and it corresponds as well to the 200 week SMA, right? I think this, for example, level could be there, right? Or there or there. And we just have to shift this consolidation phase up or down. You see what I mean, in a way? Yeah. So for example, we can pick that level. Doesn't matter. But you do see how they all intersect, right? And that will form our consolidation phase. So if they all correspond, then that might be the top, that might be the bottom, and that's the level at which we're gonna play. It doesn't mean that we might break down there anyway, by the way. For example, I'm gonna maybe use the pen to better illustrate that. So it doesn't mean we might have to specifically break down there. No, it might be there, right? It might be there. It might be anywhere, really, but that's generally the consolidation phase. And the support could be there, right? The consolidation phase, top line could be there, could be there. This is all just estimates, and like it's just to guide us through our decision, right? It's not specific values. I think that's clear, right? Yeah, so if you put all of it together, it kind of does make sense. And consolidation, which one do we use? 46%? Yeah, so it was used only 46%. I also used it from the previous cycle because I think the previous two cycles, of course, there are diminishing returns, right? And that's why I'm putting the previous cycle length. I do not think we're gonna whip in and out like 50%. The whole bear market cycle, we haven't even seen kind of like, okay, we did see 50-60% moves, but they were not in consolidation phases. The consolidation phases were around like 35%, right? And that does make like the logical decisions for me, but that's my bias. Maybe there are different biases that can be applied, and that might work just fine, right? But at least now we do have an idea of where the consolidation phase could be happening, that we're going to have a breakdown from that level soon. This is just a pit stop, right? That's what it feels like. It's not the bottom of the first leg. That's what I'm leaning towards, right? It's only a resting point, a short-term relief rally for the next leg down, which we will form actually the consolidation phase, which, by the way, lasts a long time. All right, so the least was kind of like 89 days, right? And the max was 284 days. I do not see us going through the maximum range, right? Or maybe the average or below the average. That's where I see the values are going to be for this consolidation phase. But who knows, right? Nobody knows. And this is all just speculation at best, and nobody really knows what's going to happen. It's just everybody brings out a view and makes the best guess and makes a trade based on that guess, right? The best he can. I hope this video has helped you a little bit. I hope you do see, I know this is complicated and a lot to take in, but I do hope you see it clearly. Maybe you can try and rewatch and skip through the different right parts to maybe understand some of the things that you maybe have missed, right? Anyway, I'll see you on the next video.